Good morning. It's Monday. It's time for your Monday morning mortgage update. This is Mike Lynch with AmeriFirst Financial for the week of November the 1st. So, hope you had a great weekend. Halloween this weekend. Didn't expect a lot of trick-or-treaters last night, but we got hammered with trick-or-treaters. All those kids looked fantastic. And great weather this weekend, a little bit of rain, a little bit of sun, got outside. Hope you had a wonderful weekend. So let's talk about last week, what happened last week and what's going to happen this week. And this is all about mortgage rates, what's affecting mortgage rates. So last week, we actually saw rates improve by the end of the week, and that was unexpected. I said at the beginning of the week on my mortgage update last week that it's going to be a volatile week. We were going to move to a locked position and really expect those rates to get worse, and they didn't. They actually improved a little bit. So why is that? Well, number one, all the economic reports came out and said that the economy was doing better. And when we have a good economy, that means rates should go up because they don't need to be kept down. But you don't think the economy is doing better. What I mean by that is there were some very key consumer confidence reports that came out where consumer confidence is low. And if people don't think that the economy is doing well, money will typically flow into that safer bond market, which is where mortgage-backed securities are traded, which determines mortgage interest rates. So what are we looking at this week? We're looking at our three things: the Fed, central banks, and jobs. Big jobs week with jobs reports. Let's talk about the Fed. Our Federal Reserve. They're doing their regular meeting this week, and that starts on Tuesday, ends Wednesday, and then they're going to come out with a little bit of an insight about what they said. So we don't expect a rate hike. We haven't had a rate hike in months. But we are going to get some news about taper. I've talked about taper. So what's taper? Taper is when the Fed buys fewer mortgage-backed securities than they have been buying, and that could cause rates to go up. So let's talk about the mortgage-backed securities market in the bond market. That's where mortgage-backed securities are traded, and depending on that trading, that determines the mortgage rates that you and I can get on a daily basis. So since the pandemic started, since March of 2020, the Fed has been buying billions and billions of dollars of mortgage-backed securities to artificially keep rates down. And we knew they couldn't do this forever. And so they announced a couple months ago that, yeah, they're going to start this taper. They're not just going to stop buying mortgage-backed securities cold turkey. They're going to taper the purchase. So buy less and less and less. And we knew this was coming in November. They're probably going to start tapering mid-November, but they're going to announce this. They're going to announce what their policy is, what their plan is out of this Fed meeting. So that's why we're going to pay a lot of attention to it. And if you look at the expected plan, the estimated plan, they're going to start buying fewer mortgage-backed securities and probably end the total purchase of mortgage-backed securities about June of 2022. So the bond market bakes in what they expect rates to do long term. So we could see these rates go up this week and moving forward because they're going to bake in this lower purchase. The question is, will private sector, will your 401k, your 403b and mutual fund, will they go in, those private investors, you and me both, will we go in and start buying these mortgage-backed securities to take over the void of the Fed as they start to taper and back out of it? Big question. Second thing is central banks. So our Federal Reserve obviously is meeting, but we've got other banks that have impacts on global economy, and they're meeting too. So the Bank of England will have their Fed meeting, and they're a top 5 economy in the world, and that could affect our bond market. What's the Bank of England going to do? Are they going to taper like we are? Are they going to increase their rate that they've talked about possibly doing? One of the things that's kind of tempered Bank of England's movements is COVID. They're having big COVID issues over there with this Delta variant. And, we've seen this dynamic where there's good news about the economy, but then COVID kind of is this shadow that kind of offsets any good news. And then Australia, it's not a top 5 bank, but what will they do? Why is this important? Because they've really talked about starting to raise rates. And that could have a triple effect on other non-top 5 economies, but definitely top 20 economies in the world. And then the last thing is jobs. Big jobs reports coming out this week, and many jobs almost every single day except Tuesday. There's no jobs reports. Will this have an impact on mortgage rates? If we see that more people are working, and we know, last month, 7 million unfilled jobs, people just aren't going back to work. You drive around town, anywhere in the country, a lot of jobs for to hire signs out there. And we know that generally businesses are having a tough time getting people to go back to work. And so if we start to see that increase, and more people are going back to work, lower unemployment we expect, that's good for the economy, and that is bad for rates, and we'll see those rates go up. So we're going to keep a real sharp eye on this. So very volatile week this week. No, not a week that we're going to float a rate. So really we're starting off the week in a locking position. Unless something drastically changes from the estimates, we're probably going to see rates get worse this week. We really have more risk to the downside, meaning rates increasing, than on the other side of that. So if you or your clients need any insight about mortgage rates, go ahead and give me a call. All my information is down below. If you know somebody that could benefit from this update, please forward it to them. If you have any comments, I'd love to hear them. Thank you. Have a productive week, and we'll talk to you soon. Bye-bye.